Market psychology is not a science specific to the norms of behavior and consciousness pertaining only to the exchange of capital in the marketplace, but instead, the psychology of market behavior is established by the norms of collective human psychology, however inferior or transcendent they might be. Psychological dysfunction, especially in the markets, is predominantly misguided by two inferior patterns or carnal norms established by the behavior and consciousness of participants in the marketplace. First, the primary dysfunction in market psychology is the collective behavior and consciousness maintained by the erroneous ideals, perceptions, and misconceptions that are actualized in a psychosis that presents itself as being greater than the pattern of behavior it is continually yielding itself to. The term itself is intentional as opposed to oneself, because this nomenclature describes a condition of psychosis that does not necessarily belong to the true enlightened and transcendent consciousness one is capable of possessing. This condition is actually opposed to oneself, where one is not overcome by the collective pattern of the world, but rather is able to make independent decisions within the scope of market behavior that produce a beneficial or reinforcing psychological effect which is healthy. In this case, the term healthy refers to being free of the primary psychological dysfunction, the psychosis of conforming to the pattern of maintaining deception. Second, the psychosis of error is a dysfunction that emerges when collective behavior and consciousness result in a market psychology that produces an unhealthy, unprofitable, or unbeneficial pattern of psychosis. The most common psychological failure is when skepticism or criticism prevents active participation where an individual is not free from the deceptive pattern of miscalculations and misappropriations that culminate into the psychology of the market. The psychology of the market is the collective psychological calculations, appropriations, and decisions that include both psychological illness and health. The term illness refers to the coercive, manipulative construct that demands adherence to a pattern of behavior, continually coping with the consequences of mistakes and the results of correct decision-making. The market is always coping, adapting to, and reacting to those consequences and results of collective behavior, which results in the psychosis of error produced by living a lie. Such a view of market activity and market psychology exposes a reality in the collective behavior and consciousness called the market. In this way, the market is conceptualized as a collective consciousness of illness seeking a healthy solution or resolution to one of two dysfunctions. First, the psychosis of conforming to the pattern of maintaining deception. And second, the psychosis of error produced by living a lie. The participant in the markets is exposed to a collective psychological illness requiring correct symptomatic identification, correct diagnosis, correct treatment, and correct recovery into a healthy market psychology free of the most primary psychological dysfunction, the psychosis of conforming to the pattern of maintaining deception. The market can never always be right. If the market is correct and its participants have yielded to the collective consciousness, they are no longer free to make curative decisions both in the market and for oneself. Thus, their activity becomes absorbed into the collective behavior. The psychosis of conforming to the pattern of maintaining deception is a corruption of the market where the collective behavior and consciousness exploits the error and the deceptive miscalculations and misappropriations of participants in the market. Carnality is cultivated into the consciousness when the psychosis of error produced by living a lie becomes the conscious, intentional motivation for exploiting the deceptive miscalculations and misappropriations of error by intentionally presenting the market with false stimuli. This is the psychological illness of the market. The market assumes that every individual participant possesses the same psychological illness as the collective consciousness of the market. And the market seeks to exploit its own illness, its own miscalculations and misappropriations. To be free of the market implies being free to participate in the market without being conformed by the collective pattern of behavior and consciousness the market imposes upon oneself. Trading and investing, exchange in the market, should be a curative activity to remove the illness, the psychosis, and the deception in the market and of oneself, and create an opportunity for participation in activity that produces a healthy consciousness. To be correct, the consciousness and behavior cannot be conformed to the pattern of collective behavior that is established by false stimuli, but one must be free to make decisions of curative behavior in the collective consciousness of the market that present real solutions to the market psychosis. In order to address the primary dysfunction of market psychology, one cannot participate in a way that adheres to, supports, and conforms to the pattern of maintaining deception. Do not deceive oneself. Do not be deceived. The pattern of error producing psychosis is not the real condition nor the real objective. Rather, the deception is an erroneous collective behavior seeking a solution to the problem it causes for its own collective consciousness. One simple example is observing a narrowing rising wedge of constricted activity. The wedge is only a segmentation of behavior inside a channeling of behavior, inside a broadening wedge of behavior, and so on. The pattern itself is a deception created by a collective conforming consciousness of the market trying to maintain the greater deception of miscalculations and misappropriations by exploiting the limitation of potential and opportunity in order to manage the risk of those mistakes and to substantiate normalcy out of an abnormal market psychology. The decision one makes to manage those risks should not conform to the pattern of trying to normalize abnormal behavior. The normalization of the collective abnormal behavior includes every error that requires curative attention or correction, and such tolerance of abnormality becomes psychosis in the collective consciousness. There is a basis of good consciousness which has a greater influence and benefit both for the individual participant and the collective consciousness of the market. If the collective consciousness is psychosis, one's individual decisions and behavior must be a curative consciousness that cultivates a curative collective behavior. The best basis for making decisions of nonconformity to the market psychosis is to make decisions that do not conform to the pattern of collective market behavior. In order to address the error of market psychology culminating into psychosis, one cannot live the lie by maintaining the deception of miscalculations and misappropriations. Do not live a lie. Do not adhere to the deception. The pattern of error should not become either the conditional basis or the objective of conscious decisions. The solution to the market psychosis is not conformity to the erroneous collective behavior, but the real solutions remove false stimuli and focus on real potential rather than justifying the consequences of mistaken behavior and collective psychological illness. One example illustrates the psychosis of error. Consider the investment of capital by buying stock in a corporation or investing in the decline of the euro value in global markets compared to the increasing value of the US dollar in global markets. If the real stimuli involves global trade interest and beneficial productivity interest in the market, then the investment decision will align with the resulting activity in the markets. Investment interest might be valued for a long time and for a long period of time, up to a certain value in time, or such interest could be for a short period of time in response to immediate factors. However, when the investment decision no longer is beneficial nor productive, then a decision to remain vested would be erroneous. If the collective behavior of the market does not culminate into individual interest expressed in investment, then the individual participant has either yielded to a psychosis of error by maintaining investment, or the market is collectively captivated by some other false stimuli maintaining a psychosis of error. If the individual can perceive the behavior of the market on a chart, and the market does not perceive the individual consciousness by the expressed investment, then the individual is free to acknowledge psychosis and provide curative solutions by reallocating investment. do not possess the same psychological illness the market is collectively coerced to cope with. Be decisive. And being decisive is not exploiting the markets nor the individuals participating in it. Being decisive involves recognizing the error, i.e. the investment is not producing the desired result in the market. Being decisive involves real stimulus. Initial example. If the investment decision an individual makes is not replicated in the market based on normal good consciousness, then the market is seeking another solution to cope with its own illness, its own psychosis, in dealing with the collective consciousness. The market may know collectively its own psychosis and abnormal response to stimuli that might influence a certain aptitude for potential, whether greater in value or less in value. But the market does not possess collectively the consciousness and freedom of behavior to respond to such stimuli. If the collective consciousness is psychosis, then market behavior collectively will become the opposite to solution, culminating into a pattern of conformity trying to justify its own error. If the collective behavior of the market is paralysis, then the market consciousness will collectively become a pattern of error, coping with its own deceptive miscalculations and misappropriations. The psychology of the market includes the psychosis of conformity and psychosis of error that must be addressed on the basis of productivity. Productivity is the standard of a healthy market. If an individual knows there are risks and obstacles to achieving a standard of productivity or profitability that is beneficial, then an appropriate assessment and activity is to remove risks and avoid the obstacles until an individual is capable at the level of productivity and profitability to overcome those risks and obstacles. Markets should allow for mitigating risks and obstacles through a diversified range of investment activities. However, the market is not ever going to be free of its own psychosis until individual participants are free to provide curative decisions in the market on the basis of productivity. A healthy market psychology is predicated upon healthy decision-making in the market, establishing a standard of productivity. If a healthy decision does not produce a healthy result, then either the market has psychosis in its collective behavior and consciousness, or the individual has psychosis in one's own consciousness concerning the criteria of health as it pertains to the decision one makes. The market cannot ever be right. So if the individual has psychosis, that psychosis emerged through the process of yielding to the psychosis of conformity and psychosis of error present in the market. One cannot outperform the market while yielding to the market. Productivity is a standard beyond market performance. That is the short and the long for a healthy market psychology.